I put my charts up, and all of a sudden I'm getting hounded by people saying to me, I like your charts, Mark. I find that my win rate is generally, you'll see at the back of the book, it's all in there. I put it in.
I think when I saw you're in the 90 percentile
94,
range.
97, 89. I slipped to 89%. What was happening there? To me, that was a bad month. You can literally superimpose the market maker simple framework right on top of what they're doing and show them that they actually could get in earlier and get out later.
The markets are rigged against those that have no idea how to play the game. Okay?
Yeah.
When you learn what the real game is, the rigging is the trade.
The methodology remains, as we know, it's 100 years or more old. It hasn't changed since then. It's not ever going to change because it's the only way the markets can move. If we're prepared to welcome this knowledge, throw out everything we thought we knew about trading, you will become proficient within a few months. You will build your speed up in the first year, and by the end of 2 years, you will no longer be intimidated by anything that happens in the market.
We're speaking here with Mark Wilson, who is a member of the ATS community, a relatively new member to Trade ATS in our software business, but not super new to the methodology. And just to set the tone here, what makes Mark's story really incredible is that Mark took the understandings that I teach on our YouTube channel and employed those understandings. He really dug in and he mapped his charts based off of the ATS methodology manually and did that for a long time until he found success with that and has just recently joined ATS to take advantage of our software and our other resources. But what's incredible is that Mark has written this book called Crude Rebellion, which is basically his journal of his whole trading journey from not really knowing much at all to basically getting consistent and being well on his way to changing his life. So anyway, it's an incredible story, and I'm super honored and happy to be talking with Mark here. So Mark, we get into kind of the interview, just a little bit about your background, and let's kind of further our conversation we started a little bit earlier.
Thank you. Thank you for inviting me. As far as background goes, I'd wanted to trade for many years, going right the way back. You know, I really got the bug for it around the early 2000s. But I was involved in other businesses, and you know, it never really got me until COVID, because I was involved in a business at the time. COVID destroyed it. I was in the retail sector. And with the advent of COVID, all the stores are closing and our business was just diminished into nothing.
Yeah.
And going back to the early 2000s, I remember people like Max Kaiser shouting, buy gold, buy Bitcoin. $200 announced for gold in 2005 or whatever it was. And here we are now at 2,500.
Mm-hmm.
So that the idea of getting involved with trading never left me. But when COVID came, I thought, here is my window. I'm going to be stuck at home with nothing to do. Oh, I don't think so. So I'd begun dipping my toe into trading late 2019, something like that. Tried a few platforms, tried a few brokers. I never really got into it. But literally the day we were told we must stay at home, I thought, thank you. You've really helped me here, because now I can truly, truly sit down and get to grips with what I want to do. I can learn a new skill. I mean, surely this isn't going to take long if I've got time. But we know different now. Here we are 4 years later. But
That's about everybody gets in thinking around the same thing. And just to go along with COVID, we saw a huge burst of new subscribers and basically just interest in trading. So you weren't alone. I think there was a lot of people sitting on their hands at home thinking, what am I going to do to pass this time, especially because it was so stressful. People didn't really want to think about the news and what was going on, so you weren't alone. People wanted to dig into something and they wanted to get on a new path all at that time.
yes. And at the time, if you remember, I don't know what it was like in your part of the world, but we were bombarded with television adverts, radio adverts, internet adverts, telling us, making this fashionable to get us into this. And it worked, of course. I mean, there's been an explosion of people trading. And it was well timed for me because it gave me enough information to get in. And right from the beginning, I did probably the same as what a lot of people do. Strangely enough, I'm not a particularly good reader. I like to watch. And I can watch over and over and over again and just piece by piece consume the knowledge. So I began by doing what everybody else did. When we first want to know how to do something, what do? Well, we find what everyone else is doing, don't we? And surely they've been trading longer than me. They must know what they're doing, mustn't they?
Mm-hmm.
And of course, now we understand the 90-90-90.
Yeah.
We have learned that all of these people may appear to know what they're doing, but they're actually losing money. So we must learn, why are they losing money? Who is taking it from them? And how do they take it? Who's got all the money? Come on. They've got to be our best teachers, haven't they? And
yeah, that was the one question that I was, part of that 90-90-90 class. I was the foremost, the rule breaker. No one broke rules as I did. So believe me, I know. And I sat there and that was the question I asked. I'm like, I feel like I'm a pretty smart guy. Like, I don't feel that I'm dumb, but I can't figure this thing out. Why? And why is it so easy to lose? Why can I have 30 closed positions at the end of one day and the majority of them are negative? How is that even possible?
yeah,
And, that's the one question. It's like, why do people lose? The market's almost 50-50 most of the time. It's going to go up, it's going to go down. Why do people lose overall? And so by studying that question, like you said, that if you really truly figure out the answer to that question, it leads you to what successful trading is.
yes. And it took, I watched a lot of YouTube content, namely the regular sort of content like the top 10 trading mistakes people make. Okay, let's learn the mistakes. Right, we do that. So I learned those mistakes, and having learned those mistakes, continue to make those mistakes for some time. And I remember, and I'm sure that we all do it, we probably still do it sometimes, pacing up and down my kitchen, pointing, saying,
Yeah.
again, Mark, you shouldn't do that, but you did that again. So now begins the journey inward. We've got to find what makes us do that.
Yeah.
Confront that. We've got to question that. So during our journey of learning how to trade technically, well, we're either buying or selling, aren't we? We also got to go down a parallel journey of looking at ourselves and finding out what makes us make that mistake. Why do you keep buying when you should be selling? Why do all of this stuff? And it takes time for the market to discover, I'm using too much lot size. Okay, so let's reduce that.
Yeah.
I'm still using too much lot size. So let's reduce it a bit more. I know, and one of the things you said, which was most profound, was breaking that up into small pieces.
Mm-hmm.
So much more flexibility. I can go in with 25% of my whole lot, and I can sit there all day watching it go down. It's not a problem. Done it today.
Yeah.
And I do it every day. So now so over time, we begin to build the pieces that put it all together, whilst
Mm-hmm.
crossing off the things we used to do that we now simply don't even think about doing. Buying when price is going up. We don't do that. We
Yeah.
simply don't do it. I'm almost wanting price to go down and against me so that I can buy some more. Because,
Yeah.
and so of course, all the beginnings of the self-exploration, the technical exploration, time goes by, months and months of time. And very, very slowly, it's not an overnight thing. You don't not know it yesterday and today, that's it, I'm there.
Yeah.
It's a very slow, gradual evolution.
Yeah. And the market only moves so fast to provide you with sufficient experience. You can't really pack it into a day or a week or a month.
Uh,
You have to live through multiple situations in order to start seeing those situations repeated times and understanding what's happening.
I agree. I agree. We can't say we've seen it all before because we haven't.
Like I'm putting together one of these little basic puzzles with these giant pieces, and I might get a few pieces wrong, but overall, I'm going to figure out what that picture looks like. And to me, this method gave me that objectivity where I could look at the market, I could classify what it's doing right now, I could come up with a very good idea what it's going to do next based off of the sequence that is very holds true more than anything else. And and it works. It works really well. And it also too, didn't have one other methodology that I found that to me gave an objective explanation of every candle in the market. I can
Yeah.
classify every single candle.
Yes, this sheet details the date, what I'm trading, what direction I'm trading, the lot size, the amount of margin I'm having to put by to trade that lot, the leverage, again, quite important, and the overall exposure. And then I will add on fees to get in and out. I will add on swap fees. So I've got an idea. I go in with a very small lot to start with, 0.01, whatever, so that I've got something to base my trade on. And then I'll build that up slowly, slowly, slowly.
I got a question for you on that real quick.
Yeah.
I think it's an important one. Sometimes what I've taught when I tell people to break out their lot sizes, and people have resistance to that because why would you want to trade 1/5 what you normally trade when it's funner to trade the whole thing, right? You get the juices flowing. But
Yeah.
as well as I know, most people's problem is not that they get perfect entries and they're going to miss making more money. It's they're going to misjudge things. We all do.
Yeah.
It's about understanding the range you're dealing in and owning a bigger piece of that range cost averaged. So, but what I wanted to ask you is when you put in that first small position
Yes.
to when you get a trading idea, it comes into your zone or your entry range. You're like, okay, here's that first trade. Do you notice that triggers you on a mental level? Even if it's a small stake you have in the market, but it puts a stake in the sand for you to get engaged and basically be involved in that market on a better level than opposed to just watching it and not being in and waiting for the perfect opportunity.
Without a doubt. Absolutely. just a small piece into the market is enough to get you engaged.
Yeah.
Something to build round. I fully expect a trade to go against me when I start. I mean, the chances of us getting in bang at that moment, I mean, it happened to me this week, but bang at that moment when price immediately goes in our favor.
Yeah.
90%.
Maybe 1 out of 10, 1 out of 20.
Less than
Not,
that.
yeah, it's not even, but it's not even a worthwhile goal. There's some people that won't stop until they figured out how to dial in perfect entries, perfect exits. And it's like, it's not, you need to get a entry range and an exit range, and it's a range.
It is a
And then
range.
do your best. We have levels inside those ranges,
Yeah.
but we're just trying to catch some meat out of the middle. That's it.
Yeah, absolutely. And I may well have a take profit at the extreme, and I may well have a stop loss massively away because I don't want to get caught in the noise.
Yeah.
But I don't even say I'm going to allow the trade to go to either extreme. If I'm happy with what I see in the interim period between where I got in and, roughly speaking, where I'd like to be, if I see a reasonable number, thank you very much. I would take that.
Yeah.
No, holding out for the big one isn't going to work. Not very often, it's not.
Yeah.
Going in sensibly with a realistic profit level, a realistic, safe stop out area, well away from any liquidity, as I call them, a liquidity cloud, because wherever they are, I don't want to be in that. I want to be way outside that.
Yeah.
I will wait for price to come back in to the area where I would like to be. If I get a signal, a swift move in any particular direction with a pause, I think, hold on a minute, there could be a trick here. I think I'll just take that. It's better off. I'm not going to hold out for the big one. But I know this because during the early part of 2020, when I was learning, I tripped over this guy called Wade. And here he is. I remember seeing your very first, not your very first, but in the early days, you were showing white images with simple line drawings.
Yeah.
I saw that and I thought, when truth comes to us, it resonates.
Yeah.
We feel that what is truth. We have no question. It embeds within us. So literally from that moment, I simply haven't even bothered looking at any other material. And each time we have a new ATS video coming up on YouTube, I'm there for it. And I will watch it and watch it relentlessly and relentlessly over and over and over, because I know that it will embed over time. And nowadays, I find that I don't need to go back to the early ones. The 12-part series, I recommend a lot to people. Anyone and everyone I speak with now, I will say, look, there's two I would recommend you look at. The first one is the 2022 master pattern, because that really did, especially the bit where you're pouring fuel on the fire at the end. I mean, that was just brilliant. So watch that. Watch the 12-part series at least as many times as you can think of. Go back to the beginning. Watch each and every one relentlessly until you've got it. And every time you're having a bad day, go back and have another look, because there's something you've not quite listened to. There's something you need to know. So, and this,
you're explaining right now how you approach this was me in 2012.
Okay.
That was me. It was the same thing. And I had my videos that I watched. I had specific ones, and it was the same thing. Like you explained, I'm like, this makes sense. And I don't hear, and what I knew is I'm like, everybody is talking about the same stuff. And I know that most everybody's losing money. So let's pretend that I'm like trend lines, general support and resistance stuff. Not that there's not some validity there, but I'm just going to take it all off the table. I'm going to go down every other rabbit hole that is not mainstream. And that's what led me to what I think. But you sound exactly like I did. I obsessed about it. I watched these videos over and over and over again. I spent Saturdays when the markets are closed mapping out charts manually, drawing box, testing the whole thing. And that's, you got to get obsessive about it. You do.
Yeah. It's obsession. It comes across as an obsession, but I think it may appear to be that, but I think what it really is a hunger for knowledge.
Yeah.
Is that an obsession? We know there is more to know. We know we can improve. And some of us will endeavor, and we will keep going and keep going and keep going, ironing out all those little creases. Sometimes they're big ones.
Yeah.
But then there comes to a time where we're fine tuning. Okay, I'm just going to tweak that a little bit. I'm not going to put quite so much there. I'm going to wait a little bit longer now. I'm going to keep trying. But in my early days, that to me, mid 2020, I latched on to the accumulation and distribution model. I latched on to your interpretation of it, because I don't think I'd have been able to read the books from you.
Yeah, the books are difficult to read, but and that's something I try to make clear that I didn't invent this. I've taken the accumulation distribution model, which is old. We're talking going back to Richard Wyckoff.
Yeah.
And all me and a few other people have taken that, and we've tried to put our own simplified understanding for ourselves. For me first, I'm like, how can I simplify this in a very workable way that I can overcomplicate it for myself. And that's what the master pattern is. But yeah, this is not something that is like a revelation to me. It's a framework for understanding a method, or an overall understanding.
I think that there's two key elements in a classic design. Simplicity is one of them.
Yeah. Which is a big one.
From the beginning. I wanted to know this massive noise and all going on. No. You can't build a machine that big that can move that amount of money around every day unless it has simplicity at its core.
Yeah, absolutely.
So simplicity and fitness for purpose. And your interpretation, your presentation of the way the market moves is so easy to consume. The way you deliver it, I think, do you know what? That is just so easy. So I'm going to try and copy what you do. And I say this a lot, being good at this isn't about money. It's nothing to do with that. It's not about having lots of money and having a great big account. It's simply about being a good trader. Don't worry about the money.
If you focus on being a quality trader and a quality decision maker, the money finds you.
I agree.
It's not a problem to get money, but you need to do the work first.
I agree. And when I began, as I was saying earlier, if I'd have gone around telling everybody I'm going to be a successful trader, oh, and by the way, I'm writing a book about this while I'm doing it. Can you imagine? A lot of the people in my close flat family and friend circle, I could see them zoning out as I was telling them about this.
Yeah.
You know how they do. He's gambling. He's gambling. And this is not a gamble. That's the first thing people will tell you. Well, isn't that gambling? No, gambling. If I put a coin in a slot and pull the handle, I have no control over the outcome. I'm gambling. Trading.
What separates what we do from gambling? Because it could be gambling if you have no rhyme or reason why you're putting in the trade and
Yeah.
you're just doing it haphazardly, then yeah, it is. But the idea is that every trade that you take has a set of criteria and essentially a predetermined business model of how you're going to approach that opportunity. And
Yeah.
businesses fail every day with their business models. They just don't work. And sometimes a trade, you could have a good business model and sometimes it doesn't work. But you can go start another business, which is the equivalent of another trading opportunity that meets criteria. So as long as you have those things in place, it's not gambling at all.
No, it is a continuous, never ending risk assessment
Yes.
all the time
Mm-hmm.
with a certain set of parameters. We cannot risk any more than this. We cannot do any more than that. We have a simple, all my rules are called rule number 1 because they are all interconnected, all as important as each other. If I bend or break any of them, my risk increases. So it's up to me. I can bend a rule, we do that. We allow things to push a little bit. I know I'm bending the rules a little bit, and yeah, I might get burned, and I'll accept responsibility for that. I bent or broke a rule. And during the course of my journey, I began to refer. I couldn't help. I wanted to tell everyone. I've learned this because I got it from Trade ATS for free on the internet. It's right there. Giving something away for free carries enormous credibility.
Yeah.
You know, and
You'd hope so.
well,
I get quite a bit of hate for it as well.
Well, I'm sure you did. I'm sure you did. But
Yeah.
ultimately, because you're just giving it away for free, people who want to buy into your organization, into your trading mechanism, are attracted to you. And I know because I've seen that I've spread the word, I've spread the message on various forums. I put my charts up, and all of a sudden I'm getting hounded by people saying to me, I like your charts, Mark. What's happening here? What's going on here? And when people ask me, I will tell them. And then they will say, where can I get to learn all this stuff? Well, the egotistical answer is, well, me. I can show you, but I'm not in it for the glory of that. I'm in it to spread the word. So if I were you, I would go to Trade ATS. I would just go to YouTube, have a look. It's free. Look at the 2022 master pattern. Look at the 12-part series of Trading Mastery, which I think was just a masterpiece in itself.
I've put a lot of time into that. So sure. I appreciate it.
I recommend it all the time. And then if I see people who I'm talking to making mistakes that I know they would know not to do, I will say, did you watch the 12-part series? Yeah, well, I haven't done it yet. And I said, you need to go and do it. And if you have watched it and you still seem to be a little bit confused, go and do it again and just keep watching it. And that I fully accept that when we have a job or a business or something else other than trading, I fully accept that you simply haven't got the time. the time it's going to take you to learn your way into trading will be extended multifold. I must say I'm very lucky. My set of circumstances put me in a place where I was being paid to stay at home and learn this, because I had a small company and I was an employee of that company, and I got a small amount of money every month to stay at home.
Yeah.
There are families, wives or partners, and there are other people who will be affected by our trading interests. We have to consider, will they be able to tolerate us sat in front of a screen 12 hours a day? Research, practice. They're going to get angry at us. We have to consider those.
That's
So
a whole nother aspect of trading that I don't think people really assess, particularly if you're married and you have kids.
yeah,
My kids were very young when I first started trading, and I had no idea what I was getting into and the magnitude of the amount of study it would take,
yeah,
particularly because I had no one to shortcut my
yeah,
learning curve. I had a couple of mentors back then, but no one that knew what I knew, that knows what I know now.
yeah, yeah,
And it was countless hours. And you think like, what kind of um, what is that doing to your family around you of that, because you're not being present with them while you're
yeah,
learning this thing, and then stack that on top of all the time that you're spending, and then to be reaping losses on top of that. It's absolute, I mean, it can devastate people if they don't really, if they
yeah.
don't get on the right path quickly.
Yes, yes. There are so many levels we must consider, and like any new business, can we say, well, okay, you want to learn trading? If you work really, really hard, you might just be good in 5 years. How much money have you got? Have you got enough money to pay for your way for 5 years while you learn this? You can't go out and do other things. This is what you do now.
Yeah.
Most of us, including me, didn't have that amount of reserve to pay for everything while we just sit here tapping away and reading and practicing. So I found a sort of happy medium whereby maybe every now and again I would take a few days' work to just bring some money in to just keep the boat afloat, just enough, and whatever I could sell, whatever I could do, whatever work I could do, I can turn my hand to quite a lot of things. I would do that. But ultimately, that's all part of the long-term plan. And I don't know about you, but I see so many people who seem to want to get all their trading done in half an hour and go out and do something else. I don't understand that. Why are you doing that? There's mentors out there that are advertising. You can get all your trading done and dusted out the way in 15 minutes, 20 minutes, half an hour, and then you can go back to your life. No, trading.
As well as I know, we cannot impose our timing on the market, and we cannot impose what we want to have happen on the market. The market does what it does, and it's up to us to adapt.
We must harmonize with, to a certain extent, we can harmonize with our day, but there are certain times of the day in the market, a few hours in the morning, a few hours in the afternoon, sometimes a few hours in the evening, where markets move. And I suppose we could put positions on based on what we think might happen today and just leave it alone. But really, if we really are going to get there, we need time in the market to get a feel for how the market moves. Whether it be Forex, whether it be metals, whether it be stocks, I don't even talk about. That's a casino. I wouldn't even get involved. But certainly the currency markets that we trade, oil, naturally, I love oil, gold, silver, anything like this does have a rhythm. It has a pattern. They operate within certain ranges. We kind of know we're not going to get any big shocks. And the ones that do come, we kind of know are coming anyway. And we know why. And what's helped me along more than anything is, as I said before, when I have a difficult day, I think, okay, it's time. We're going to stop now. And I haven't had a difficult day for as long as I can remember now. I think, and then I'll go back and I think, I know what I need. I need to ground again. And I will go right the way back to the 12-part series, or even just recently, Christmas time, I think it was, I watched the 2022 master pattern again. So I could reset to help me remember all the things that I'd forgotten, that I'd fallen back into bad habits again. I was putting weak hands on when I shouldn't have been, and I didn't even see it until I went back. I watched a couple of videos, and I thought, do you know what? I just didn't even realize I was doing that. But thanks for that, Wade. Now I can go back and I can reset myself and trade like I know I should be.
You know what's funny about that you say? Because I'm the one teaching it. I'm teaching my interpretations of this stuff on those 12-part series. But I will tell you, even as the teacher, every time that I teach these concepts, and I've taught them hundreds of times over and over and over again, different people, different settings, different things. And every single time I say this again, I basically relearn it again myself.
Yes.
It's actually the act of teaching it is an exercise in living it yourself. And I can't emphasize that enough. We used to say this a long time ago. We were in a trading group. We had an office here in San Diego, here in California, and we told people that were coming in, they were trading with us. We're like, find someone to teach, even if you don't know a whole lot. Like, teach them what you're talking, because the act of talking through your thought process with somebody helps you understand it better. It really solidifies it for you. So just wanted that's what I've experienced as I teach other people, is it kind of resells yourself on the validity of what you do.
I agree. When you speak it, you got to think it before you speak it. So you're actually reprogramming while you're doing it.
Yeah.
And this was one of the things people said to me and have said, oh, you could have your own YouTube channel. And I thought, that isn't what I want. I can't commit to that. I could, but I still believe I am a new progressing trader. 5 years in now, I'm still new and progressing.
Yeah.
Further, although I'm not very good at reading, I'm really good at writing and talking, and I just do it as if my reader was sat next to me, and I was explaining to them what I'd done, why I'd done it, the price I went in at, what I'm expecting, all of this stuff. I just took the screenshots and put them on and just wrote about them as if my reader were next to me. And I did a nice, great big book, because people want big pictures. But most of the things they complain about are tiny little images that don't show detail. They want to see that. So, yeah, you got a big book, here, if I may. There we go.
Yeah.
There's the hard copy. This is no small book.
Yeah.
And, the pages with great big images showing what I've done. I don't know whether you can see that. You probably can't, but I wanted my reader to be able to look at it. So maybe for a few dollars more, get an e-copy as well, because you can zoom right in on it and you can see exactly where I'm going with that.
Yeah.
And another thing about reading a novel, reading a piece of fiction, it's a form of escapism. We go into it and we're just completely hearing everything, but in our own voice when we read it. So by reading this over and over, we're actually hearing it in our own voice, which unconsciously programs. We can pull things out of the hat that we didn't even know we'd read, and we're doing it. So this is why I think in a book form, we hear it in our own words. We're unconsciously programming ourselves how to do this. And then after a while, we find ourselves reading, and I say, well, if you come to a point where you're a little lost in the book, go back to where you weren't. You'll find yourself again. You'll find where you're at if you just keep going back.
Yeah.
And you'll find yourself again. And that's where you need to start again. Reread the next bit.
Yeah.
And combine that, as I've said frequently, if in doubt, and you can't get it from here, get on and check out some of the ATS work, because what I'm saying here is kind of, I'm moving the information forward. You'll see it in video presentation, plus you've also got it here to refer to if you need it. So the two work, rather well. And that's still to this day, I find that the software, if I were a complete newcomer, it would just help me so much, because I've learned to map it all myself. And I tend to find that when I put a box on, I might actually be ahead of it, because the ATS will wait for confirmation and then put the box on. I don't have to do that. I see a small contraction, and as far as I'm concerned, that's part of the conversation right there, and it gets a box.
And part of what I try to teach on the YouTube channel is how to understand the characteristics of the three market phases, what they look like, what they feel like, and all that. And people don't really understand. They obsess about, how do I exactly draw a box? What's this exact criteria? And they don't understand that there's an algorithm is, for when it comes to mapping out market phases, is never going to be faster than you seeing it with your eye and you could start to see, like, it's starting to have characteristics of contraction. You can see that sometimes before a specific criteria is met. You can see expansion legs properly playing out where sometimes a mathematical criteria has not been met, but you can clearly see the activity and the characteristics of that phase. And so I think some people, when they go through my YouTube channel, they overcomplicate it. I'm like, guys, we're looking for the market to travel. We're looking for a fresh contraction with those characteristics, a tightening of the market. We don't need to overcomplicate it. And then we're looking for an expansion to the high and the low out of that. And when we have the contraction and then the expansion following it, we have those two critical pieces. Now you can navigate that area and look for that trend phase and compare it to the prevailing trend and everything that we teach. But I think people overcomplicate it. You're just looking for that fresh contraction, and then you're looking for the expansion, and then you're looking for distance traveled, and then you look for another contraction because we want displacement. That's it. It's very simple, or it should be.
Of the mechanism. I mean, the most difficult thing that one of the most difficult things, and there have been many, is to establish which particular contraction we're working with. How many times have you looked at one on maybe the hourly or maybe even the 4 hourly? No, perhaps not. The 30-minute. I'm beginning to favor the 30 and the hourly more recently. But even on the smaller time frames, how many times have you gone in seeing yourself at the bottom of what appears to be a long move? Price goes against you, and you zoom back out to the bigger time frame, and you suddenly realize that you've actually gone in at the top of a short move and not the bottom, because you were actually looking at the wrong contraction. And learning that conversation, look at I tend to set out on the 4 hour now. I see what's the big picture, where's the slow money now, where they've had their phone calls and their meetings and they've got it all planned out. So where are we going on the 4 hour or even the daily? Given that, do we see direction? Okay, we've got the beginnings of a nice direction, but we know they can't just go back and change that. We're going to be going for a period of time in that direction. Remember that when I go to the 30 or the 15 or the hourly, remember, if the hourly is coming down, it's not going to be for long, because the 4 hourly is telling you it's going up. And it also confirms, because the daily has hit the bottom of its low and now appears to be on the turn back up to its own established value level. So you've got the daily that looks like it's turning. Even the weekly, if you can get that as well, then you know that everything underneath it, no matter what happens, it's all going that way. So who cares about the money a bit? It doesn't matter. Don't put too much money on. And it doesn't matter if you go out of the money.
If I could give people from this interview one magic bullet, and I think you'd agree with me, lower lot sizes. Having lower lot sizes and the ability to scale in and still be under a decent risk, like no more than, let's say, 2% of your account. And let's say that's in with 5 positions, 3 to 5. That, how much stress, number one, does that take off your plate? But number two, having that flexibility, how does that increase your win rate?
Absolutely. And I find that my win rate is generally, you'll see at the back of the book, it's all in there. I put it in.
I think when I saw you're in the 90 percentile range.
97. I mean, 89. I slipped to 89%. What was happening there? To me, that was a bad month. But my win rate may be very high. But then you'll compare your average win price value to your average loss. Yeah, my loss value is higher than my win value because I'm putting lots and lots of smaller pieces on.
Yeah.
And I will take off lots and lots and lots of small bites, and the account climbs and climbs and climbs. And then, all right, I might get one wrong, or it might go against me. And all of a sudden, I've got quite a sizable number, which might be 3 times the amount of one of my winners. So the system thinks, your losers are outweighing your winners, but they're actually not. I can take 25 winning trades and lose 1 and still be massively ahead. It doesn't matter. It's okay to lose. We have to accept that,
Yeah, no way around it.
No, we will lose. But I think that the segmenting of, I remember the exact video. You were actually talking to someone else. One of the members was saying, and I think he was trading at $5 a pip. And you said to him, okay, $5 a pip, that's pretty scary. And it is. I'm kind of about that now. And boy, oh boy, when it goes against you, the numbers clock up pretty quick. So I'm having to adapt to this. As the account size grows, I'm having to adapt to seeing predominantly my P&L is always red because I'm going in and accumulate. And I may run, if I'm feeling confident, I might have 2 or 3 different trades going at the same time, but not too many, because I know that one of those trades will be running in the green. So I will take off that green and bank it, put another one on which goes red. So my P&L is predominantly red. And every now and again, there'll be that wonderful turn, which I'm sure you're aware of, when you've been sitting there for so long and it's been in the red and it's been in the red, and all of a sudden everything goes green. And what a day we have when that happens. Silver yesterday, brilliant. All those positions turn green. So they all come off the table because I'm in profit and I want to bank that profit. I then go back in again and it all goes red again. So we need to get used to living in the red. And it's okay to do that. It's all part of the job.
You could live in the red, but that becomes the whole discussion about your pain threshold, which I think is the most important thing that I teach personally. But the pain threshold, living in the red, you have to, but the size that you're in, if you're all in, you can't survive in the red. It's too painful.
No, I agree totally. Being red is okay. Being red on your limit is not okay. So we have to manage that. But I have come to a new realization. I spent many, many years thinking that the reason, hang on a minute, let me get this right. Thinking, when can I finally trade with my own money? When will I be good enough? Well, what's the first thing that happens when you do that? It changes the dynamic. All of a sudden, there's risk here. That's my money on there. Oh no, I don't want to lose that money. I'm out. Oh, and now look what's happened. It's done exactly what I thought it would.
Yeah.
We hear it all the time. The risk induces that something within us that says, no, it's going to go wrong. It's not wrong. You forget everything you've learned. You lose faith. You give it what it wants. And then all of a sudden you realize, oh, now I knew that. Had that been a practice account, I wouldn't have done that. I've accomplished everything I need to in practice. Why am I not doing it with my money? Well, because it's your money. So, okay, which brings me on to the capital funding. I've completely turned my view. Why should we risk our own money? Banks don't. Institutions don't. They risk your money. No problem if they lose. What do they care? They've been paid for doing their job. Okay, This is part of the model. I now wholeheartedly say to anyone, forget trading with your own money unless you've got £500,000 or dollars that you can comfortably afford to just give to a broker and only use 2% of that to trade with. That's dead money. That's not doing anything.
Yeah. And that's how you're exactly right. You got to be ready to just park your money there and leave it there. And if you're in the position to do it, then that's fine. Most people that are learning to trade are nowhere near that position.
No. And when you give your money to the broker, whose money is it? It's not yours. Even when my money's in the bank, it isn't mine. It's the bank's money. I gave it to the bank. So when we are in our practice account, there is no risk, zero risk. Don't we find we're doing really well? So, okay, go on to a paper trading account. No money is real money until I can see what I bought with it on my drive. It isn't real. It's not there. It's just numbers. So if I, for a nominal fee, if I can buy my way in to a big account that gives me a lot more capital, which I can apply my set of rules with, the only thing I have to risk is the amount of money it costs me to buy my way into that fund. So I advocate.
And it costs you a little bit of time. A little bit. It costs you some time to do the evaluations, things like that. But if you're really committed to doing this, the time is negligible compared to the upside.
I agree. And yes, time costs money. What could salary sacrifice? What could we be earning if we weren't trading? Yeah, I can go and get a day job. Yeah, I can run a business. Maybe. But if I truly want trading to be my business, I got to recognize that. And I got to say, okay, what is the most cost-effective way I can do that? I want my resources, my holdings, my money in my account, because I'm going to have to pay for my home life. I'm going to have to pay to insure the car and pay for certain things. I've got to eat. I've got to live. I need that money. So I'm going to keep that money where I can use it. And I'm going to use someone else's money to trade with. I'm going to use someone else's capital account that's very kindly afforded me a line of credit for just a couple of hundred. I can buy my way into a fund. My only risk is a couple of hundred. There is no risk at all. So that is why I believe if we can combine the two, as you have, you've got the market methodology, which we love. We all love this, and I'm sure all of our members here in the ATS community, we thank you for bringing us this, because we wouldn't be where we are without the method and the way it's been presented to us and delivered to us by you.
Appreciate that.
You're welcome.
I think that the prop firm space, as of recent, has even though there's a lot of scams and there's a lot of shifty characters, I think there isn't a lot of businesses surrounding money and finance, but there are risks to it that are out of our control, which I try to be very transparent with. As far as where the funds are coming from, our role in that as a mediator in between, the data we get, all those things. I try to be very transparent, and I tell the community, look, there are still risks. There's things that could get outregulated. There's things that could happen with this, but everything carries risks. Your money sitting in your bank has risks. You know, there's risks of money devaluing because of inflation. You know, everything has risks. So given that we can accept those risks, the net positive of being able to take a small amount of your own money to access a much bigger amount of money, a $250,000 or $500,000 in capital, to me makes so much sense. Particularly because, as you stated before, we are doing what the banks do. I tell people all the time, I'm like, if you want to get into this industry, I've learned through proof and through seeing a ton of people implement this, you have to do everything opposite of what is generally told to do. Everything. And that comes down to the technical methods that you employ, the amount of leverage that you use in your trades, the scrutiny of entry and exit people put on. You got to be looser with that. It's going to happen. You have to give yourself room, but right down to how are you actually financing your your ability to be in this business.
Yeah.
Like you mentioned, you need to still pay bills.
Yes.
You can't take grocery money and go put in a trading account and expect you're going to have a good experience. It's going to not turn out well. So by having prop funding, you're able to do, not only can we trade accumulation distribution the way the banks have to trade, they have to do it this way because that's the only way you can move big amounts of money. So we got that down. We have that's good. But if you can't finance it properly, the rest's not going to matter because you're still going to get desperate. You're going to over leverage. You're going to blow your account. Now that we can essentially create our own infrastructure through prop funding,
Yes.
we become just like the bank. We're raising money so that we don't have to risk our own.
I agree.
And we can access that sizable amount of money because 1% of 500,000 is much different to your baseline income than 1% of $1,000 that you probably couldn't afford to risk.
You
It's
also
much
said something recently. I can't remember where you said it, but you said it. If we've got, for example, £100,000 trading facility, parameters are placed upon that, which I agree with. I wholeheartedly agree. They're teaching us how to protect. So if we're lucky, we'll get a generous amount of daily drawdown offered to us. We have a daily drawdown, which could be anything from 2% to 5%. We have a total drawdown, which can be anything from 5% to 10%. So we haven't really got 100,000 to trade with, have we? We've only
It's the only
got
way you could lose.
10,000, haven't we? So you've got to trade that. If you've got £100,000 account, why not trade it as if it were a 50? If you got a 50, why not trade it as if it were a 25? So I know the parameters all say 2 to 2.5% risk. I don't like to risk any more than 1% on any one trade, ever. Now, cumulatively, there are others that will say, well, hang on, if you've got 3 trades rolling, or 4 or 5, you're risking 5%. I agree. But on every single individual trade, my maximum risk is 1%. And by experience, by history, by recording my trades, by capturing the screenshots of my monthly stats, I can say 90% plus of my trades will be successful. Thanks to the ATS model, which I put my faith in. Got to believe it. Knowing it is one thing, believing it and having faith in it is another. We must push that and say, look, don't panic, don't get out. We've seen this before. We might get pushed here, but ultimately we know where value is. We know where that magnet is. We're in an uptrend, or even we're ranging, fine. If we are way away from value and we are, getting a little bit far away than we would like, don't panic. In fact, buy some more. Because if we go out of the money, you know this, you've got a position on, you've gone out of the money. The less informed may say, I'm losing, I'm getting out, it's time to go.
Particularly if they're in its size.
Absolutely. But if you've only gone in with a part lot, 20% maybe of your overall size, you've got the upper hand. I almost want it to go against me. Because if I add another lot when I've gone a bit further, by the time that position has gone halfway back to where I was, where I first went in, I've now balanced the books. I'm at 0. I've lost a percentage. However, my second trade has gained the same percentage. If I want to, I can close out for a flat zero now. Thank you very much. So I'm getting really in the habit of just, I see it go down, I see it go down, buy a bit more, buy a bit more. To the uninformed, they'll say, you're chasing a losing trade. You're buying more into it. No, I'm not.
Catching a falling knife, but you have a defined big range where the idea is valid. So that
Yes,
doesn't apply.
I am accumulating at a discounted price. The further down it goes, the cheaper it is. I'll have some more, please. I agree, it can sometimes go wrong. It can go a little bit too far against us. And another little trick that I found is don't get out altogether. Just take some of it off. Leave the rest on, because you never know, it might come back in and you can always put it back on again. Take it, if it's getting a little bit too tight, half your lot, take it off, take some off, give yourself space to breathe. If it comes back in your favor and you gain confidence again, you can put it back on again. And by the time you get back up to where you were when you started, you're in the money already. So, but this takes time. You can't just do that. After quite a long time of seeing and feeling the pain, as we all have, it takes that for us to overcome, get comfortable with it, and then build our faith in it. Several years. It can't be done straight away.
Yeah.
But I will say, and I say it a lot, that my learning curve has been completely turbocharged by the gifts that you bring. That what I've learned from the methodology and the way you bring it to us, there is no doubt about it. You have probably halved or even cut my learning curve by 2/3 by as a result of just listening, and learning. So I thank you for that. I really do.
I appreciate that. It's good to hear, because it's been a labor of love a lot of times, and so I appreciate that. And I just want to go out, because there are some people that will, say, well, I trade, trend lines. I trade with traditional indicators and I'm successful. I'm like, okay, well, that may be the case. But
Yeah.
what I loved about accumulation distribution model, and what really got me thinking, like, this is it. I'm going to become a master at this, back, and this was well over, 11, 12 years ago now.
Yeah. Yeah.
What got me thinking that was I liked the objectivity of it. I liked the puzzle nature to it. It's like, if it's not this phase, then it has to be one of these other two. And it gave me it's like you see those puzzles that they have for like kindergartners, or little kids, they have these puzzles and they're these giant pieces, and you can look and you can put it together in a few minutes, right? And so that's what this was to me. I'm just like, I'm putting together one of these little basic puzzles with these giant pieces, and I might get a few pieces wrong, but overall, I'm going to figure out what that picture looks like. And to me, this method gave me that objectivity, where I could look at the market, I could classify what it's doing right now, I could come up with a very good idea of what it's going to do next based off of the sequence that holds true more than anything else. And and it works. It works really well. And it also, too, I didn't have one other methodology that I found that to me gave an objective explanation of every candle in the market. I can classify every single candle and give it a definition of what phase it's in. You can't do that when the indicators fail or the robots fail or whatever. So okay, got to go back to the drawing board and tweak the settings. Okay, I must not have setting. I must know this, or maybe I need to add something, or maybe I need to take something away. There's so much to change, and all that those averages do, because it's all mostly based on averages, is it puts an average distortion over the phases of the market. It gives you, it's like you have the truth in front of you, the price action. And what you do is you muddy it. You smear a bunch of mud on it with indicators and then expect that you're going to have some detailed analysis. And then all they do when they change the indicator settings, they smear the mud around and expect a different results. So that's what I really love.
You know, by design. I see some charts. There's a whole plethora of different indicators splattered all over them, and I think I can't actually see a candle. I can't see what's happening here, and all indicators, without exception, show us what has happened before. None of them, with exception to the market maker method, can begin to predict where price may go in the future.
Yeah,
this
because it's based on the phases. You're expecting phases.
Measure. I see my order block form, so I will immediately get that on, and I will wait for the confirmation. We see a swing, whether it be low or high. I will take those dimensions and I will immediately plot them. Days later, price not only reaches them, but to the exact pip it reaches them. And I've shown this to people, and I've said, look, here's an image I took the other day with, and if I may, you term projections as order block projections. In my world, I changed that, if I may humbly say. I call them price level projections because not every one of them becomes an order block. Price may reach it, but it may all of a sudden reject and head off in the other direction. It doesn't necessarily become, and I'm going to get shot down for that, but it's the way I see it, that it is a price level projection, but rather than an order block projection for that very reason. But I've got away with that.
There's no, I've taken the concepts I've learned and I've put my own terminology on them that made sense to me. It's about explaining it in a way that clarifies it for you. So everything I teach is my lens of this, and so you'll adopt your own terminology, things that explain it and get it clear in your head. At the end of the day, we are all building on top of the accumulation distribution model. That's all we're doing.
Yeah.
So if it makes sense to you in your head to explain it to yourself in a slightly different way,
that is everything else with established value, with order block, with expansions, and that's built in now. It's hardwired into me now.
One of the things that I'll mention too is that it's so funny in this business is that you get people that are so protective over their information. And I've gotten accused multiple times, like, you stole this from me, you stole this. I'm like, we all got it from anybody that's in the smart money concept space started looking at Richard Wyckoff. If you want to say we all stole it from him, okay, that's the facts. Okay, what we've all done is put our own lens on it. We've figured out little nuances to it. But at the end of the day, it's accumulation, distribution for profit. That's it's how the big boys move. And so, the business is so funny, and the other people in it say they want to protect it. It's like, this is my information. And then if they feel like, oh, you're stealing it or whatever, it's like, it's how you stole it. And we've all made it our own. And so to me, I think it's an honor for someone to take what I've done on YouTube or I've done and build on it. Do your own thing. I don't care. To sit back and say that I own this information is ridiculous. I've made up some terminology, and I've made up some things that made sense to me, and I've taught those things that way. But I
Uh,
think it's great. I would love to see. In fact, I think you should start your own YouTube channel because people would probably love to hear. They would learn something from you that they can't learn from me,
I've
based on your
already
experience.
said, maybe, never say never, but I did say
There's a
earlier
lot of
on,
work,
I couldn't
so
commit to it.
I will say that.
I couldn't commit to it. I'd have to devote time. I'd have to. I don't know. I don't know. I won't say never, but for the time being, I've got enough on my plate as it is with writing books and trading as well. We must remember this whole thing came from trading. So it, I will build and build, and over time, we'll continue to learn and continue to look out for more knowledge that I can grow with. But what we have here with the master pattern understanding forms the very basis to which all other trading styles can be harmonized with. People trade patterns. They trade W patterns and M patterns and top hat patterns and whatever kind of pattern you like. You can actually get the market maker framework in its raw form. Do you remember when you used to draw on the diagonal lines to show expansion and how accurately price will expand into those? Well, I started doing that. And if you go to other people's pattern trading methods, you can literally superimpose the market maker simple framework right on top of what they're doing and show them that they actually could get in earlier and get out later.
Yeah.
But those that practice these methods take offense to that. They don't like that. No, I know what I'm doing. Okay, well, that's absolutely fine. But by going in where you're going, your risk is this big. When if you apply the market maker framework over and top what you're already doing, your risk is reduced to this big. They still don't want it.
It's become two sides of a religion, and there's people that will die testing indicators
Yeah,
until forever, and there's people that will find the narrow path. I think that it is that we're on, and they'll go all in on it. But I think what the hardest thing for people to get their head around is the manipulative nature of the markets,
oh yeah.
and expecting thinking that all's fair in this
Was it
world.
was it
And
episode
it
10?
yeah.
I think I could be wrong here, but towards the end of the 12-part series, there's one that I replayed it so often. It was so funny because you're just about to sign off, and you say, and the markets are definitely rigged, and that's it, and it goes off. And I thought,
I remember
you've got it right there. You just had to get that in. And that moments like that go in because they're funny, and I hear it, and I
we may not say the markets are rigged against those that have no idea how to play the game. Okay?
yeah,
When you learn what the real game is, the rigging is the trade. You're looking for the rigging. That is the setup.
yeah,
So to us, they're not rigged anymore. We know the nature
yeah.
of the truth of how they move, and that's that. We can't trade until we understand the rigging. So
Another market sentiment is another one that you've talked about extensively, and I've built that in to my trading package,
yeah,
my
it's
fortress.
a layer two thing. It's not as perfect as the
No,
market maker's framework, but it is helpful to see
yeah,
see when
it's
retail's getting mowed
helpful.
down.
It's not a given that just because retail sentiment is 80% sure that we should be going long. It's not a given you got to apply that to the position we're in right now and think, okay, well, we're in a long trend. We're 80%, and retail sentiment is 80% long, 85% long. Somewhere along the line, someone's going short against that, and they're not going to like it. So we're going to see a crash soon, and they're going to push that and more and more and more until it really hurts, because they can. And then just at that moment, when we've had enough, we've got to get out. Who do we think's been buying up all those losses? They have. And now they're net long. They're very happy. They can push the price right up. But it's not a necessary given. I see this with oil a lot. Weeks go by where we're net long and price is still going up. But I understand the oil market's slightly different. With currencies and with other assets, it's pretty good indicator. If we see the masses are going short, we really need to think about getting into a position opposite that, because that's what the market makers are doing.
To me, the sentiment is a confirmation tool, but it comes second. It comes second to trade placement and directional bias with time frames. The basic strategy. It comes second. It's something that you want to get in. You want to understand the market framework. You want to understand the overall direction, and then you want to look at what's a retail's mindset. What's their sentiment? How are they adopting to what I'm looking at here? Yeah. And so it's just a by the way thing. But yeah, it's yeah, you're definitely correct on currencies. It is a little more. It gives a little bit better information.
Yeah,
and also too, the amount of people that trade currencies is a better sample size. Some of that we will get retail sentiment data off of crude, but crude is not traditionally traded.
It trades differently.
So and it might be the people that are trading crude. From the data sample that a lot of these sentiment indicators come from on that are getting maybe potentially data from a more sophisticated trader that's trading crude in general. Yeah. So we want to go to popular markets that we know there's a lot of traders, we know there's a lot of losers trading it, and then that's where we're going to get the best sentiment. Sam.
Yeah. Yes, most definitely. And just I'm going to show you this because I know it's in the book. One trading tool which I have found to be empowering is this one. See that? I don't know whether you can see that. There you go. Look at that. There's something about this. When I win a trade, instantly, if I get out of that trade, now how good does that feel? Because I've won a trade. And I use this all the time. It's with me. And it's a very, very good quality bell because it gets a lot of hammer. And I know it's symbolic and I know it's simple.
Yeah.
The sheer joy that brings when you know you've won a trade and you hit that bell. Brilliant. I recommend we all get them.
What do you hit when you lose a trade? You have a board with a nail sticking out?
Well, if I may, on the rare occasion, which it is rare now, that I lose a trade, I already know I've lost it before I lose it. I don't get caught out. I know I'm going to lose it. I know I'm going to have to give back. So I will begin to plan how I'm going to give back. Do I just want to give it all back in one go? No. I'll take 10% off. Or 10%. Every time I have a good run on something else, I'll take a little piece off that and give it back so that big debt diminishes over time to almost unnoticeable. See what I mean? If I'm trading on crude and it goes against me, but I'm trading on, I don't know, Euro USD and that's going for me, I will pull the profits in from Euro USD. And while I'm busy doing that and I see oil going against me, I'll take a small slice of that off. I'll capture a loss. That's fine, because it just gets completely absorbed into a whole big line of winners that I'm taking, to the point where I've got almost nothing left on my losing trade. I may well have given back 0.5%, maybe. Yeah, maybe, of my overall. But over time, it's unnoticeable. So I don't have something to hit when I lose, because I've already planned ahead for how I'm going to deal with that loss.
Uh-huh.
And even that's a win, you know. Learning how to lose is a win, is it not?
It's a huge win.
Given what we know, with a very, very simple framework, gives us a complete insight to the institutions that have all of the money. It teaches us how they get it, and gives us a very, very clear, simple method of getting in and copying them.
What do you think that learning this method, as far as time to learn, what's realistic if someone starts right away learning, let's say whether it's my channel or it's another one that teaches accumulation distribution, but they start thinking about this.
Yeah.
What would you tell them about, number one, learning the method, but also feeling like they need to balance the other narratives that are taught? So they're kind of going back and forth. What can you tell them about going all in on this?
Well, I've got to say, I've looked at all the other methods, all of them, and simplicity be the key. If I were to start all over again, I would need only one method. This is the only one I trade now. I have no other indicators other than VWAP. That's it. I find that a little helpful, but learning this framework will instantly give you an idea of what's going on. Look for the repetition, the contraction, the beginnings of expansion, and the trend, if there is one, because sometimes there isn't. But certainly expansion moves within an overall up or down trend, or even a range. Once we've got that, the only thing that will restrict our growth is our willingness to change what we think. Do we accept that this is better than what we know? If we fight with it, we will be years in the making. If we are prepared to accept on face value what we see, as over time I've learned, if we're prepared to welcome this knowledge, throw out everything we thought we knew about trading, I would speculate that most traders, if we can do that, you will become proficient within a few months. You will build your speed up in the first year, and by the end of 2 years, you will no longer be intimidated by anything that happens in the market, if you're prepared to welcome the knowledge. That's the only thing that would slow you down. The methodology remains, as we know, it's 100 years or more old. It hasn't changed since then. It's not ever going to change, because it's the only way the markets can move. So the sooner we adopt that and welcome it, the sooner we become consistent. That's the way I see it.
All right. I think it's well said. So I think, just to wrap up, any final thoughts that you would want anybody that's watching this to know?
Consider risk. Consider, if you're going to get involved in trading, or even if you already are, whose money do you want to risk, yours or theirs? And consider the others around who are going to be affected by that we must consider those around us. And accept that we must commit to this. We don't commit, we won't make it. We can't do this on the side while we go and do our proper job. It doesn't work. If we're going to trade, we're going to trade. We're not doing anything else. This is our business. This is what we do. And we are going to ask a lot of those around us to support us for a while. But if they can, they too will reap the long-term benefit of what we're doing today. They will reap that tomorrow. We can't expect them to see it the way we do. But if we are committed, if this is what we want to do, without being selfish, we will make sacrifices to make this happen. But the sacrifice is only short-lived. It becomes easier as time goes by. So just commit, understand the risk, understand where you want to get that risk from, and consider those around you. You're going to need some help, but of course they will be rewarded in the long run if that be the case.
Excellent. Very good. And then, and also anybody watching this, again, can't emphasize enough, is Mark's book, Crude Rebellion.
I'm blessed to support it, guys. I mean, to me, that's a huge honor that you would buy that. I'm so glad. I mean, I am. I don't know what to say. This is part one of what I'm working on. Is a series of 3. This was from nothing. Didn't know anything. I'm now on the road to funding. So that's going to become, and I'm hoping that's not going to be a very big book. This one took 4 years. I'm hoping book 2 won't take very long. And then funding and thereafter. So it'll be a 3-part, which will take all new traders right from where they are now with no knowledge through the process of understanding, getting into the funding program and becoming funded. That's kind of how it's evolving. If we want to move on in trading, treat yourself. Watch the 2022 master pattern. Watch the 12-part series. I give them to everyone. It will accelerate. It will turbocharge. Just be free to welcome the knowledge and put it into practice.
That's the biggest thing. I tell people, it's like, let the method, listen to what I say, but I put it out there for free. You don't have to buy one thing from Trade ATS, as you've demonstrated. You don't have to buy one thing from my organization to go take this method and put it to work. All you have to do is be willing to listen to the information and prove it out to yourself. And that's what I want people to do. I'm going to teach it to you for free. You got nothing. There's no risk to you, but go do the work to draw the boxes on your chart. Watch it and see if what I say is true. And you did that. And that's why you have the level of belief. You got enough of my belief to get you to go down the rabbit hole, but it was your proof to yourself, drawing it, watching it, interacting with it. That is why you're where you are today and why you'll continue to keep going where you're going. So that's what I want people to know from my point of view. Don't spend $1 with Trade ATS. I don't care. I'm not here to sell our software to everyone. I don't care. I made it for myself a long time ago. I'm grateful I got some people that are coming on the ride with me, but I don't care. I want them to go prove the method to themselves on their chart for free. And then if that works for them, then come be part of our group if you want to, and that's it.
Giving. There's something about giving for free. As I said before, it beams credibility. Why would I want to spend so much time with you for nothing if I didn't truly believe in what I'm doing. And that is what makes the whole method and the whole energy of the Trade ATS gathering, if you will. We're all the same. We all want to be that good. We all do. And I'm sure if that's what we want, then that's what we'll get.
It's a personal choice though, because this business is full of self-sabotage. There's a million ways we could do it, and we have to fight against it. Even when you're at a level, of my understanding, I still have to talk to myself and get myself in check. It's constant self-evaluation.
Yeah.
And the only way you're going to be able to get to the place you want to be and sustain, because you could still lose it. You have to sustain.
Yeah.
Is only going to be through being dedicated, disciplined, and committed to learning. I still am learning little nuances, every week, every month. They're getting less and less, but I still see things that I never saw before. And I think, is this useful? Is this something that's worth putting a framework around? Is it something that we could automate through our software, through the analysis that would be worth it? That wouldn't, we don't want to build anything that takes away from the basic foundational methodology. I don't want to, it's like, if it doesn't make that better or enhance that, we don't want to build it. We want to keep it simple. So, but even now, I'm still seeing things that I'm like, that's a new revelation. So you just got to be dedicated to it. You got to be dedicated to learning the model of accumulation distribution, and you got to be dedicated to thinking how the big boys move their money. When you put your mind in their space, you will begin to see the real market. You will begin to understand why it moved the way it did, why news came out and it said this, but it went the other way. You will start looking at, it's a game of liquidity, and the market follows the path of least resistance, and that's it. And so, if people can commit to that, and then they're going to be on a good path. The other path is constant optimization, constant indicator tweaking, constant change, and a lot of people will never make it that way, unfortunately. So, this is like I said, it's not easy. It's not easy to learn what I teach. It's the truth of how the market works, based off of all my experience and the experience of talking to people like you and everyone else that's really dug in. It's the truth, but it's not easy. But at least if you're going to commit to learning something, you're now playing the real game. You're not playing off to the side. You're not on the wrong field. You are on the correct game. You know the rules. You understand how it works. Now you could actually build mastery with the real players. And that's it.
Well said.